Join us right now again, Andrew Durgee. He is the co-CEO of investing platform Republic. Republic announcing it launched a SpaceX token, of course, SpaceX owned by Elon Musk, which mirrors the performance of private shares of the company. Actually, you know what? Before we even go there, let me just ask you, since we've been watching this together.
Sure.
One of the big questions about, by the way, the future of SpaceX is the relationship that Elon Musk has with the government.
Yeah.
And with this administration, given that they are responsible in large part for assigning big contracts and also regulating this business. How much do you worry, as somebody who's now gone all in on SpaceX, about the politics that he's engaged in?
The reality is a lot of these different private companies have these different government contracts, and they rely on, could be subsidies, it could be the relationships, lobbyists. Investing in private companies has a risk to it, but also that's where the greatest upside is, right? So since the 1930s, retail has been kept out of private businesses, right? Now this is the first time where they'll be able to have access to the upside and not simply only be able to participate at the IPO level.
Okay, so here's the question, though, about all of this. And now we're going to go back, because before we started this interview, or before we were so, interrupted by the president, what you're doing, you are ultimately bypassing to some degree the SEC rules that have been put in place around buying private companies for accredited investors. Accredited investors mean you have more than $1 million to do this. You're allowing people to buy into a private company that doesn't have the same disclosure rules as the public ones do.
Sure.
For people who can buy it in even small increments. What's the smallest?
$50.
$50, smallest piece you can buy. How are you technically doing this? Meaning, are you buying the underlying stock in a foreign investment trust of some sort, and then mirroring that in a token here? Is that what's really happening? Just so we're clear.
So, and one of the reasons we launched SpaceX first is we already have exposure to SpaceX. So we have that underlying asset. The others that we're launching, and including today and throughout the next couple of weeks, same thing. We either have the underlying asset or we have access to the underlying asset. So ultimately, that will sit with us.
And so the question is, why do you believe, this is a regulatory question, ultimately, quote unquote, tokenizing a private asset that otherwise you could not own is not going to be contested?
We fundamentally disagree with the U.S. accreditation system. Right?
Okay.
And particularly me personally, something that is put into place in the 1930s to protect consumers ultimately. Right? But as we look at, the world has changed drastically now. If a mother of two in Iowa can mortgage her house and go put it all on black on Vegas, but she can't own pre-IPO SpaceX, that's insane.
Okay, so we can all have, look, we can have philosophical debates. We can have a philosophical debate about whether the law is a good law or a bad law. That I'm with you about.
Right, but we now have a structure in a way that allows us to facilitate this type of offering completely within the existing U.S. structure to allow this to happen.
Has this been approved by the SEC?
Where
are you with the SEC right now?
Yeah, so we have active conversations with them. They're, we consider them a close partner, and we're going to continue to work with them through this process. But we're not using something new. We're using something that's pre-existing.
Have they told you that this is? Have they given their blessing on this?
No, that's not really how that works. I mean, they're evaluating it ultimately.
Right. And so my question is, what is the risk to somebody who engages with you, buys a piece of a token of SpaceX, and let's say 6 months from now, the SEC comes out with a proclamation that says the tokenization of foreign assets, which is what this effectively is not allowed for investors that are, quote unquote, not accredited?
Great question. So we have to file what's known as a Form C anyway, so that has to go through its ultimate approval process. We do that as a business. We've done it hundreds, thousands of times. As we get through that is when the distributions happen. And so once that is approved, distributions take place, everything is in the clear. And so we're going through that process now.
But what I'm asking is, if it's not in the clear, what happens to your money?
Well, we won't take in that cash, the investment, until that is in place.
Are you doing this with the blessing of Elon Musk and SpaceX?
No, we don't have to ask for permission or beg for forgiveness. The structure that we are using doesn't require any approvals from
I just wonder if you do that, though, if other companies down the road are going to say, I don't want you as a private investor so that you have this underlying asset to then resell to other people.
The futures contracts exist outside of us, right? So if you want,
private companies can choose who they want to let in.
Sure. But the reality is we are not doing anything that's out of bounds
But will you sell tokens on anything that you don't have an underlying asset ownership stake?
No, if I don't have it either, let me be clear. If I don't either have the underlying asset or direct access to the underlying asset, we wouldn't touch it.
And will you not sell more than, like, what's the limiting factor on how many tokens you could sell for your underlying stake?
What we have ultimate allocation to. I mean, we're limited in retail. We use something called Reg CF, which has a $5 million limit for U.S. retail. But there's Reg CF, Reg D, Reg S. These are all these different exemptions that we use in order to facilitate these transactions. But regardless, we can only sell what we have or have access to.
Can we just call a spade a spade? Effectively, what you're doing, you agree, I think, that what you're doing is effectively at odds with what the law is intended to do. How about that?
I don't know if I want to say we're at odds. We're using the laws that exist. We're not bypassing anything. We're using a pre-existing structure that has been tried and true.
Right, but you recognize the intention of the SEC law was to prevent the public from the public with less than $1 million being an accredited investor from accessing private company stock, because the view was that they didn't have the same kinds of disclosures and rules that a public did, and that effectively this is a workaround to that.
I think the reality is when you really titrate it down, ultimately, we very much limit what people's exposure can even be to this, right? The maximum that anyone can do in the SpaceX offering is $5,000, right? So we are giving people an opportunity to participate and a very limited capacity in something that they've been kept out of previously.
What is the fee structure to you?
Yeah, so that there when
so
we
for the privilege of accessing this, what I'll call workaround for now.
Yeah,
I pay you what?
So where we really make at the end, where we're going to make our money, is in the secondary trading. So once the asset is trading on our secondary market, because we own the only 24/7, 365 ATS for trading of digital assets. No one else has that for digital securities. Okay. So we'll make a percentage on the trades up and down in that secondary market.
Okay, but what about the fees that I would pay to you?
There's no direct fees from right now in our current offering. Could be changed in the future.
So if I spend $5,000, if I buy $5,000 worth of SpaceX, that's a better deal than Fidelity gives. I mean, I have to pay Fidelity something, right?
Yeah, ultimately, because what you'll have is we're setting it up at whatever the previous round is, whatever just took place. You get to get in at the same point that everyone else just did.
Right. Let me ask you one other just philosophical question. I know you disagree with the accredited investor conceit.
Sure.
We watched a whole bunch of SPACs go public.
Oh, yeah.
In the last 4 years.
Yeah.
And they're coming back right now. But there was a period of time where people were all in on SPACs, and the argument was you got to give people access to stuff early. It's part of the American dream.
Yeah.
If you ever want people to be able to catch up and experience that dream, you have to let them into this kind of format of an opportunity. And the truth is that most of them did not perform.
Yeah.
And actually performed quite badly. And there were a lot of promoters out there promoting lots of things that did not come true whatsoever.
Yep.
And that was always the argument against allowing retail investors that didn't have enough money effectively to lose to play that game.
Yeah.
What do you think of that?
Yeah, one of the areas I think SPACs really went wrong is the forward-looking statements. Right. Ultimately, what you saw was these crazy projections that they were allowed to put out.
Right.
Ultimately, that became a trap for retail investors. Right.
But isn't that the same trap some people would argue for private companies? Because they can put out those forward projections too, by the way.
They certainly.
So what's the difference?
Yeah, I mean, they certainly can. But I think when you looked at the SPAC structure, because it was these public market environments, people had a lot of confidence in it, and that. Because they went into it with that level of confidence, because there's I'm protected, this is public market, wasn't reality, right? They fell into that forward-looking statement. These are private markets. There's inherent risk in private markets, undoubtedly. But ultimately, how you look at private markets versus public markets is different. It's not the same.